Zillow Zestimates are wildly inaccurate, and as a real estate investor, this is what you need to know about them. So first, comparing investors to homeowners, because that's our business. Investors, we are going to be making our money on the buy, whereas homeowners are going to be realizing their gain on the sale because they've already bought. Homeowners are looking strictly at their Zestimate. That's the only number they see. That's their whole universe. As real estate investors, we're looking at everything. We're looking at other comps that are selling. We're looking at days on market on average. We're looking at price reductions in the area. And most importantly, we're watching those Fed interest rate hikes because those have a big impact on home prices. So why does this Zestimate stink? Their algorithm that puts together this estimate uses data that is old. They're looking at old data and they're looking at too much data and not narrowing things down. It's looking at an entire zip code. It's not looking at neighborhoods or even, micro neighborhoods within a mile of you. And as investors, we know that when you pull comps, they have to be recent and they have to be close to the subject property. The other problem with Zillow's estimate is if you live in one of the 12 non-disclosure states. I like to call these the non-disclosure dozen, but basically home sale prices are not public record in these states. All the other 38 states, when you sell a home, it's listed on the county's website and you can look exactly how much that home sold for. I'm sure you've even browsed the price and tax history of a home on Zillow and seen it sold for exactly X amount of dollars. Well, in those 12 states, that's not public information, so Zillow has almost nothing to go off of. And lastly, if the estimates were accurate, don't you think Zillow's home buying program wouldn't have gone out of business and cost them billions of dollars? I think so. So in markets that have been crazy hot for the last 10 years, when anything is going up, anything you do is going to be making you money, people were doing those 6-month total rehabs, and they were coming out ahead, making a lot of money, right? Because the market was just blowing up, appreciating at breakneck speed. But now with the interest rate hikes that we've seen, this time last year, they were 3.5%. They're 5.5% now. So what has that done to the market? Well, the market does not look like this anymore. It looks a lot more like this. It happens, we've seen it over and over again. And with markets that are crazy now, with crazy uncertainty, comes a lot more risk to you guys as investors. So you need to be a lot smarter in markets like this. So what do we do instead? Do we sit on the sidelines and just hide in fear? No, we don't, right? Recessions are great opportunities, and Warren Buffett says when there's blood in the streets, he's buying. And what that means is when everybody's getting scared and confused and pulling back and sitting on the sidelines, that's when you need to dive in as a real estate investor, because that's when those opportunities are best, because competition is way down. Sellers are going to start to figure out that competition is down, that their price is down, and they're going to start meeting you where you need to make a good buy, a good decision, because in real estate, we make our money on the buy. So what are we going to focus on? So because we don't know what the market's going to do in the next 3, 6, or even 9 months, we need to focus on quick exit strategies, okay? So cosmetic flips are great, nothing more than paint, flooring, that sort of thing, no major rehabs. And then wholesaling is also a really great option right now. We could be in a completely different world in 9 months, so you don't want to lock yourself into anything that's going to be a long-term project right now. So how do we do that? How do we get prices down to where we need to be? Because homeowners are watching their Zestimate, which is baked into the last 6 months when the market was rosy. But it's going to take the average homeowner another 6 to 9 months to realize what we already know. But what you can do is educate the sellers. Ask them, hey, have you noticed a change in the market? Here's what I'm seeing, and here's what the impact the interest rate hikes are going to have on home values. Empower the seller, okay? If they have high equity or own it outright, or even if they just have an existing mortgage, those are assets that the seller has that they might not know about. So I want you guys to educate and empower them to use those things. Creative financing and assuming other people's mortgages are really good right now. So these creative financing strategies can benefit you as the buyer, and it can also benefit the homeowner if they're looking to sell and they don't want to take a huge price cut on their house. And lastly, guys, run your own comps. If you work with a realtor in your area, have them run a CMA for you, okay? And then look at the properties, look at the comps that they're running, and start to figure this out for yourself so you can start to put it together. If you guys have a homeowner who is stuck on that Zestimate, just know that you're going to need to discount that thing by 20 to maybe 40%. Because, as I said, it's wildly inaccurate and you need to protect yourself because you're making your money now when you buy, and you're going to realize that profit when you sell. So if you buy at the wrong price, you're only setting yourself up for failure down the road. When you go to sell and it gets stuck on the market and you got to take a loss, don't let that happen to you. If you're going to use that Zestimate, cut that thing up, okay? Because I know a lot of you guys had a lot of questions about this. You guys are worried about what you're seeing, and that's why I made this videos for you guys. So follow along. I'm going to be bringing you guys a lot more of this kind of good stuff. And we're going to be keeping you guys up to date on what the market's doing and where it's going, because as real estate investors, you need to know this stuff. It's going to cost you a lot of money if you don't watch these free YouTube videos. You're going to pay for it in the end. So follow along and let's get this thing going. Talk to you guys soon.